hey, are you ready for what's happening next? It's all coming to a head. It's getting crazier and crazier, which means time is at a premium. You better be thinking about what you're going to do, how you're going to protect yourself and your family, and get ready for the ultimate disruption. And to help us do this, we've got none other than John Rubino of dollarcollapse.com. And you know it well, also author of The Coming Dollar Collapse and The Money Bubble, co-author with none other than our friend James Turk. And hey, John, welcome back. And it's never boring when you do this. You know, it's never boring on here. That's for sure.
Hey, Gary. Yeah, there's never a shortage of stuff to talk about, huh? You want to start with China this morning? Because that looks like that's... It's one of the big interesting stories out there. Basically, China, after the 2008-2009 financial crisis, leveraged itself to the hill. It quintupled its debt, bought commodities of all kinds, pushed up their prices, and created the illusion of a recovery worldwide. And then that kind of petered out, and we started to drop back into what looks like a deflationary abyss with commodities crashing and China's stock market tanked and everything. Well, they responded by doing exactly the same thing. They borrowed $1 trillion in the first quarter of this year and created a little mini recovery in oil and iron ore and a few other things. But this time, it's not really well hidden. You know, the first time around in the recovery from the Great Recession, we didn't completely get how much money China was borrowing and the impact it had on the global economy. But this time, people are starting to figure it out. You know, you're seeing lots of headlines about various aspects of China's debt. And so that creates a different dynamic. You know, you've got George Soros out there warning that China today is a lot like the U.S. in 2006, 2007, right before the housing bubble burst. And other headlines tell us that Chinese cities have decided to start borrowing really aggressively again. You know, the central government in China told a lot of these off-balance sheet entities to tone it back. You know, that was their shadow banking system, or that is their shadow banking system that operates outside the realm of traditional banks, and they were supposed to cool it, but they didn't. You know, they've stepped it back up again and are borrowing huge amounts of money, and China's total debt has climbed to above $25 trillion, which is an insanely large amount of money for a developing country. And their banks are doing something really interesting that Doug Noland at Credit Bubble Bulletin just pointed out. They are using bonds as collateral for short-term loans, you know, within and between banks. But they're now using more bonds than actually exist in the Chinese financial system. In other words, they're using bonds to collateralize more than one loan per bond. And that's the kind of thing that sets the stage for a crisis, because suddenly these loans are not risk-free anymore, because the collateral won't necessarily be there if one bank defaults on a short-term loan. And that's the kind of thing that sets up, a waterfall failure of a lot of different banks. If one of them goes, it knocks down all the other dominoes. And so suddenly China is a really, really risky situation and very possibly in danger of another financial crisis.
Yeah, it's, a lot's been written about it, some even in the mainstream financial press. And it all comes down to how long is it going to take for the inevitable to occur? And that's the interesting thing. I mean, how long is it going to be? It's going to happen. We know it. And it always takes longer than you think. But when it happens much faster than you ever thought possible. And that's where we're heading towards.
Yeah, because, nobody can continue to borrow $1 trillion per quarter. That's just mathematically and physically impossible for any economy, not the U.S., not Japan, not Europe, certainly not China. So they have to scale it back. They have to slow down at some point, or they just totally blow up. But when they slow down, that means demand for oil will scale back, and demand for the raw materials that they've been stockpiling with this latest $1 trillion of debt, the demand for those things go down. And so their prices will probably turn back down. And so we'll see the commodities busts, which seems to now have moderated, return. And all of a sudden, all these banks that are on the hook for huge numbers of loans to energy and mining companies will be back in danger again, because you'll see those, the borrowers begin to default. They're already going to default on a fairly large scale this year, even with oil, for instance, at $50 a barrel. But let oil go back down to 35, or God forbid for the industry, the high 20s again, and we'll be right back into a banking crisis in the U.S. where J.P. Morgan, Goldman Sachs, Citigroup are going to have to dramatically increase their loan loss reserves, which means their earnings are going to really underperform. And so anyhow, when China runs out of borrowing room, that's when a big phase change happens in the global economy. And it's hard to believe that point is very far in the future, because they can't keep going like this.
No, I think you're right. At some point, the inevitable is going to occur, and they're going to have to throw in the towel. And when they do that, anybody's guess where it's going to end here, John.
Yeah. And meanwhile, while that's going on, you've got the dollar falling versus most other currencies, which is the same thing as saying those other currencies are going up. And think about what that means for someplace like Japan or Europe, which are, kind of dead in the water economically to begin with. But if their currency goes up, that means their exports get more expensive, which actually slows their economic growth down. So it's exactly the opposite of what they want. They've both taken steps in the last year to cheapen their currencies. They've gone to negative interest rates on a scale never before seen. Both of their central banks are still buying back huge numbers of bonds, which is pumping lots of money into the system. Those are things you do to cheapen your currency. Those are ways to devalue. And it didn't work. The markets are responding in exactly the opposite way from what these guys were hoping for and expecting. And so now they are in a deepening hole that it's not clear how they get out of, because if negative 1% bond rates doesn't cheapen your currency, what will? So there's a big debate going on now about whether central bank policy has pretty much run its course, whether there's nothing left to gain from playing monetary games, and we have to find some other way of devaluing our currencies and getting the economies growing again. And it's not clear what those are. Massive new government spending is, first of all, hard to implement in the moment. It takes a long time to come up with a new budget. Governments work on cycles where they can't just decree huge amounts of new spending tomorrow morning. You got to pass it through the legislature and sign it at the executive branch, and then put the gears in motion. To have that money be raised and then sent out into the system on various projects. So that's not a short-term fix the way just lowering the Fed funds rate used to be thought of. And so it's going to take a while, if we have to go to fiscal stimulus, for it to have any kind of an impact. And it's not clear that that'll have any kind of an impact either, because you either have to print new money, which we've seen doesn't work for buying bonds in order to fund government spending, or you have to raise taxes somehow, which is, Japan kind of sort of tried that. They pumped out huge amounts of money via the central bank and increased government spending, but then they raised taxes in order to moderate their deficits, canceled the benefit of the increased government spending. And so anyhow, there's no clear path from here to a quote unquote normal economy for any of the major systems. So first of all, they're going to be winging it in the future, trying things that might or might not work, and they have no idea. And second of all, they're going to be increasing the amount of leverage in the system no matter what they do. There's no way to go forward with decreasing leverage if you don't want to just blow up, after you borrowed this kind of money. So the whole world is now sort of in the same boat that China finds itself. And we're going to have to adopt similar policies if we want to avoid a 1930s style deflationary depression, which is to say we're going to have to start borrowing more money. We're going to have to start increasing the money supply really aggressively at a time when we've already done that for the past 10 years and arguably for the past 30 years. And there doesn't seem to be any room left. So we are rapidly approaching that wall where when we hit it, nothing will work. And, it's a terrifying prospect for everybody except the gold bugs who have kind of planned for this and expect to profit from it. But for everybody else, every normal investor out there should be absolutely terrified by what's coming, because you can't tell whether stocks are safe or bonds are safe or cash under the mattress works in this kind of an environment. There's no way to know, because we're heading into uncharted territory in which volatility and general craziness is the only thing you can predict with certainty.
Oh, isn't that the truth? And yeah, it's that's the thing. No matter how you try to plan, no matter what you think is going to happen, you're probably going to be wrong. John, who would have thought for the past 5 years they could have kept the lid on things and kept it going? No one, certainly not me, not you, so many of people I speak with, none of them believed it was possible, and yet, hey, they did exactly that.
Well, yeah, that's the big caveat in all this, which is that we've been saying it couldn't go on for a decade, and it has been going on. They've been keeping it going through ever more extreme monetary and fiscal experiments. And the numbers have reached the point where a rational analyst looks at them and says, oh my God, this can't go on for another week. That we should have blown up a long time ago, and we haven't yet, but we will soon. And, the fact that we haven't yet means that the whole we will soon thing has got to be taken with a grain of salt, because the fact that they've been able to keep it going this long kind of obviates rational analysis. It just doesn't necessarily make sense anymore to look at fundamentals, because the fundamentals, at least in terms of historical norms, have been violated so completely in almost every aspect of the modern financial world that we really are in uncharted territory. But I will still go out on a limb and say this can't go on for much longer.
Yeah, well,
because, it just doesn't seem possible that these numbers can grow from here. And the imbalances are now so huge, and the problems that everybody's facing. We haven't yet talked about Italian banks, which look like they might be blowing up. And that could be one of the first dominoes to fall that push a lot of other Eurozone countries out of the common currency. And Greece is now talking default again. It just goes on and on everywhere you look. Saudi Arabia is having to borrow money to pay its bills because oil prices are too low. So they're running through their sovereign wealth fund, which used to be one of the biggest in the world, and so they're basically spending their seed corn. And pretty much everywhere you look, you've got similar stories where countries that were once big savers, or once rock solid financially in one way or another, or once able to grow dramatically from a low base, that's not happening anymore. You've got Latin America in chaos, and Japan really just grinding to a halt. They don't know what to do because their demographic problems are swamping government financial stimulus. And so even though the government has taken on more debt than any other country as a percent of GDP in history, it's not working. They're not growing anymore. And Europe, my God, we could spend a whole show just on Europe's many problems and many structural imbalances. So, and the U.S. just this morning announced that manufacturing growth had slowed again. We're right on the edge of contraction in manufacturing, which means that we're going to end up making less stuff next year than this year, very probably. And how do you run a highly leveraged economy that requires 6% nominal growth just to keep from adding more debt in relation to GDP, when the manufacturing sector, when the real stuff part of the country is not growing? And the answer is you can't. You can't just have services be the whole thing where we serve each other drinks and cut each other's hair and hope to have a growing modern economy. That won't work. So wherever you look, there are imbalances that looked intractable that just can't be fixed through any obvious means. And so they won't be fixed.
Yeah, until it has to be. And it's sometimes the cure is far worse than the disease. Here, I think the disease is terminal, and you've got a bunch of incompetent doctors in the emergency room who just want to give out OxyContin and send you on your way.
Well, yeah, it gets them through the next cycle, whatever their cycle is, whether it's the political cycle or the earnings cycle for corporate leaders, or it gets them through to the point where they can be renominated to the chair of the Federal Reserve, if that's, what they're doing. And that's really as far as it goes. I think these guys are just trying to get through whatever they define as their important short-term time frame. Mm-hmm. And they're doing it so far, but there will come a point when that doesn't work anymore, where a corporation borrowing money to buy back its own stock is punished by investors rather than rewarded, and where lowering interest rates from -1% to -2% actually makes the currency go up rather than down. Oh, wait, that's actually happening now.
Oh, yeah. Hey, how about that?
Yeah.
How about that?
Who knows?
Amazing, huh? Amazing. Yeah. Did you ever think this was possible?
No. And I still don't think it's possible.
And yet the impossible.
Maybe we'll wake up sometime and realize that the last few years were just some weird dream, that what is impossible didn't actually happen instead of did happen. But anyhow, the way bubbles work is they go through a stage like this where you just can't believe what's going on. It should never be able to happen. Go watch the movie The Big Short, and you'll see that with housing back then, where stuff that, strippers owning 5 houses, all with adjustable rate mortgages, stuff like that, which that happens in that movie, and it happened in real life. Or gardeners in California making $12,000 a year, buying $700,000 houses, stuff like that happens. It shouldn't be able to, but it does. And this stuff with Chinese banks and the Eurozone, things that are happening there are in the same category, stuff that just should not be possible. And yet here in this bubble environment, it is possible and it's happening, but it can't last because it violates some basic laws of economics and finance. And so...
You mean there are laws, basic laws of economics and finance?
There are. They are almost as rigid as physical laws. You can't get past a certain level of debt for long without paying a huge price for it, for instance. That's a historical law of finance that is being stretched but not broken right now, but it can't be stretched beyond a certain point. So we'll find out what the point is, and then in retrospect we'll say, oh yeah, the last 2 years of that bubble were crazy, shouldn't have happened, but reality reasserted itself, and that day is coming. It might be very soon, but obviously it might be a little less than very soon, or a little longer than very soon. But sometime in the next few years, we're going to be talking, Carrie, and it's all going to have worked itself out as it should. All this debt will blow up in the various borrowers' faces and the various lenders' faces, and the world will start responding to this much leverage the way it should. And then, the tone of our conversation will be really different, because we won't be so frustrated by the world acting in ways that it shouldn't be acting. It'll be acting the way it should. That'll be terrifying for most people, but at least it will be consistent with history and common sense.
Mm-hmm. Well, it's all about to get very, very interesting, and it's scary in some regards, but you know what? It's got to happen. And you know what? It's going to happen. There's nothing I don't see that anybody can do about it here, John.
No, you can't fix it. I mean, you see a lot of the financial markets beginning to respond, like gold and silver have been the best performing assets of absolutely anything so far this year. And that's a sign that the markets are starting to think in terms of risk off. In other words, how do I protect myself from craziness if it happens? And you do that by buying real assets. So in part, the gold and silver mini bull market that we're seeing now is due to China's borrowing so much money and spending it. Part of what they're buying probably is gold and silver. But a big part of it is the rest of the world saying, oh my God, all my financial assets are way up. The world is even scarier than it was 5 or 6 years ago. Maybe I better cash out of some of these historically expensive stocks and bonds and buy some stuff that's historically cheap that will protect me. And so you're seeing a lot of money flow into gold and silver. Now, that won't go in a straight line. There will be corrections along the way, but it's very possible that this is the beginning of a new leg in the bull market in precious metals, because the system is getting more and more over leveraged and just behaving in crazier and crazier ways, and more people are starting to see it. So that's one sign that traders and investors are starting to wake up to the sheer lunacy of what's going on in most of the world.
And lunacy it is, no question about it. It's just insane. I mean, things that you never thought were possible before, like deficits to the moon, unlimited deficits, like Donald Trump. So many things, they're just indicative of what's happening here, John.
Politics, of course, like you said, Kerry, is another part of this. When people perceive that the world is spinning out of control, they're open to new ideas, quote unquote, in a way that they wouldn't normally be in good times. So you're seeing, so an outsider like Donald Trump basically locking up the Republican nomination this week. Mm-hmm. And Bernie Sanders, though he's not going to win unless Hillary Clinton is indicted, is still making a huge point out there that the system isn't working for working class and the working poor anymore, and that it's time for a revolution. So when you've got people talking about revolutions and getting votes, and getting lots of votes and big rallies, that's a sign that the financial system and the political system are both starting to kind of teeter. And it's because of excessive leverage, which changes so many dynamics in the economy in a negative way for the people who aren't symbol manipulators and part of the 1%, that you're seeing around the world. Donald Trump's and Bernie Sanders not only start to get votes, but to start winning elections. And that's a huge deal. And it ties into this general story of increasing instability going forward.
You are so correct. And it can get very scary very quickly. So you need to be prepared, have a plan. Like Mike Tyson says, no plan works after you get hit in the head, and you will get hit in the head, but hopefully not as badly as is possible here, John. I mean, what is worse here? Not being prepared and not having a plan and hoping for the best, or having some kind of plan that will hopefully take you to where you need to be. Anyway, that's it for today. So check out John's site, dollarcollapse.com.